I think you could see a lot of investors exit the paper system for allocated tokenized gold, at which point the system could face that sudden collapse triggered by unorderly unraveling of unhedged rehypothecated exposure. And I think the bottom line is that tokenized gold is not just a new form of gold or better gold, whatever people want to call it. It's a potential catalyst, to this gentleman's point, for the collapse of the entire paper gold system.
What I said was that I expect that gold will maintain its purchasing power. If the US dollar lost 75% of its purchasing power, and the dollar maintained its purchasing power, that would suggest a 3-fold to 4-fold increase. It's simple math.
A quiet shift in global finance is accelerating, and at its center is gold reclaiming a role the paper system can no longer convincingly imitate. Andy Schectman, a longtime precious metals analyst, explains that after years of watching the gold market operate through a deeply leveraged, fractional paper system, cracks are finally beginning to appear. For decades, only a tiny fraction of traders ever demanded physical delivery, allowing each ounce to be sold many times over without consequence. But as central banks repatriate their gold and more investors insist on allocated ownership, the flaws of this rehypothecated system are becoming visible. Andy Schectman says that tokenized gold may be the pressure point that fundamentally destabilizes the paper gold market. Its promise of instant verification, true allocation, and seamless transferability removes the opacity that has protected the paper system for decades. Investors can now hold metal in a form that is both fully accounted for and easily used as collateral, a breakthrough for individuals who could never practically leverage their physical holdings for major purchases. Andy Schectman then connects this shift to broader geopolitical developments, particularly the expanding gold-based settlement architecture across Asia, Africa, and the BRICS economies. Countries like the EU can already convert digital yuan directly into gold on Shanghai's exchanges, bypassing the dollar entirely. With new vaults emerging across Belt and Road nations and the development of a BRICS settlement unit composed of 40% gold and 60% member currencies, he argues this infrastructure is being built deliberately. It represents not a common currency, but a gold-anchored mechanism for global trade settlement, one that could reshape the monetary order as trust moves from paper promises to verifiable metal. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
I really hadn't researched it much, but I've been approached by a couple very big names in the industry recently to perhaps be very front and center in new programs that they are launching, which I will have the pleasure of talking to you about soon, Dunnigan. But until we get to that point, I've really kind of dug into this a little bit recently. And, you know, the gold market globally operates on a fractional levered system. And we're seeing some of that start to crack right now with the amount of deliveries. And that system basically operates where a small amount of physical metal backs large volume in paper claims. That's the rehypothecation that you speak about. In other words, each ounce is sold over and over and over and over again because no one ever stood for delivery. And that's why it's worked for decades, because few ever did. In fact, when you and I start talking about the others in 2020, the group on the COMEX said was standing for delivery, that was the central thesis of everything I was saying. You're like, this is so weird, Dunnigan, because all of a sudden it went from 0 to 100 where no one was standing for delivery. Now you got this big group standing for delivery. But now you have central banks repatriating gold. Remember all the banks that we talked about, the German Bundesbank, the Dutch National Bank, the Bank of Austria, Hungary, Turkey, Poland, the Czech National Bank, they all repatriated their gold from the Bank of England and the New York Fed. It's about trust. And investors now are shifting, as you mentioned, to this tokenized gold. And the more I dig into the offers or to the possible opportunities that have been presented to me, the more I begin to think, yeah, this may actually have a profound effect because it gives fully allocated and instantly transferable and fungible ownership of the real metal. Not only does this undermine demand for paper gold, which is, I think, been exposed by much of the world. They see the rehypothecation. They see the Achilles heel of the system is standing for delivery. It also gives very intriguing options for collateralization of your metal that many of us who have, a large portion of your assets in gold and silver come to a point where you want to buy a home or you want to do something, you need collateral. And the banks, well, how do I know you got metal in your closet and blah, blah, blah. You can't use it. This does. But what I could see happening actually because of this transparency and because of this instant validation and transferability and collateralization, I think you could see a lot of investors exit the paper system for allocated tokenized gold, at which point the system could face that sudden collapse triggered by unorderly unraveling of unhedged rehypothecated exposure. And I think the bottom line is that tokenized gold is not just a new form of gold or better gold, whatever people want to call it. It's a potential catalyst, to this gentleman's point, for the collapse of the entire paper gold system. I agree with him because paper promises that have been exposed for being BS, I think this is the antidote for it. And if done properly, could rewrite the entire ecosystem, if you will. I think it's very intuitive question, and I am inclined to believe it. The idea is right now, the way that it's set up before we talk about the unit, is that China can buy oil from United Arab Emirates, and they'll pay for it in digital yuan. As of right now, the UAE could go to the Shanghai Exchange in Hong Kong and stand for delivery. China has made it immediately convertible into gold without having to switch to dollars first. So UAE says, I really like gold for that. So go ahead, give me your yuan. I'll switch it into gold immediately. Boom, done. These rails, these vaults will be built all throughout the Belt Road and Asia, Africa, South America. We already see vaults expanding in Singapore just built a new one, and St. Petersburg just built a new one. And of course, they're building a BRICS platform. And we have all of these vaults in the United Arab Emirates and in Brazil, all around the place that will have gold that are all connected to the same system. Well, this is the rails for the unit, as far as I'm concerned. And the unit would be best described as a settlement unit of account concept. So in other words, it's not a common currency, right? It is a settlement unit of account where it's a basket of 40% gold, deliverable to central banks if they need it or want it, and 60% BRICS plus currencies.
Rick Rule explains that precious metals bull markets typically begin with gold, which attracts investors during periods of fear and uncertainty. Once momentum builds, leadership often shifts to silver, a pattern he has seen multiple times and believes may be happening again. Historically, silver has outperformed gold sharply during these transitions, and high-quality silver producers and juniors have delivered some of the strongest returns in the resource sector. He cautions, however, that many so-called silver companies have little real silver and are dangerous places for speculators. With gold near record highs in real terms and silver still far below its inflation-adjusted peak, he believes the setup is increasingly favorable, especially once major silver producers begin reporting strong quarters. Rick Rule adds that patient investors still have ample opportunity. If the US dollar were to lose a large share of its purchasing power over the next decade, as history suggests it could, gold would likely rise several-fold just to maintain its real value. In past cycles, silver has typically outperformed gold, and the best silver juniors have amplified that move even further. This arithmetic creates the possibility of exceptional long-term returns for disciplined investors, provided they focus on genuinely high-quality companies and avoid the speculative pretenders that flood the sector. Let's get back to the interview.
My experience has been that precious metals bull markets are established by gold. It's the fear buyer.
Yeah.
And when the momentum in the gold price attracts generalist investors to the space,
Yep.
market leadership changes from gold to silver. This will be the fourth time in my life that this occurred. Uh, it looks like in the market that transfer is taking place as we speak. Whether or not that's true, of course, time will tell. When leadership transition does take place, silver outperforms gold pretty dramatically. And the high quality silver stocks outperform any other extractive asset class I know. I hope you paid attention to the part where I said high quality, though.
Yeah.
There are a lot of purported silver companies that litter the speculative landscape who unfortunately have no silver. Those can uniformly be expected to do well too for a little while, but they're treacherous places to be. We haven't had the type of move in the silver market that would allow the senior producers' margins to increase as dramatically as the gold producers have. The strength that we've seen in the gold market for the last 18 months has a lot to do with the fact that they're making so much money.
Yeah.
The silver guys haven't had that happen to them yet. Right now, the move in the silver juniors isn't fact-based.
Yeah.
It's moved around silver in the anticipation that the stocks will do well.
Yeah.
For it to become real, the market is going to need to see a bang-up quarter out of Hecla, or a bang-up quarter out of Core, or better yet, both.
Yeah.
A bang-up quarter out of Pan American, and they're going to see that. It's important to note that most of the real silver companies are gold companies in drag. More than half of their revenues are gold, but they're still extraordinarily leveraged to silver. It's important to note too that while gold is not merely at nominal all-time highs, but probably in constant dollar all-time highs, silver is far from an all-time high. $57 comparing to 50 forgets the fact that 15 years has passed since the last time they were at 50. The dollar's deteriorated. I think arithmetically, no, but that depends on the individual and his or her time frame and their tenacity. I've become very patient and very tenacious, not because I don't wish for instant gratification, but because I've learned over 50 years in the markets that instant gratification is not on offer.
Right.
An investor who is prepared to stay the trade for 5 years is by no means too late.
Yeah.
Let's look at the arithmetic. 2 interviews ago, not the one in Zurich, but the one before that, we talked about the fact that I believe that over 10 years, the US dollar loses 75% of its purchasing power.
Yep.
If it does that, I would expect that gold would maintain its purchasing power, which means that over 10 years, I see gold in nominal terms between 3 and 4 times higher than today. In prior bull markets, once the crossover has occurred, once silver begins to outperform gold, the performance in silver is roughly double the price of gold. I'm not saying to you that silver is going to go 8-1. What I am saying is that a move higher in silver, from my point of view, is statistically extremely probable.
Right.
If one looks at history too, the higher quality silver juniors outperform the silver price 2-1. So if you follow that arithmetic progression, what I'm saying is that there's a possibility, if not a probability, that over 10 years, a portfolio of high quality silver juniors could give you a 20-1 return. Your investors shouldn't think in their mind, Rick Rule just said that Amalgamated Moose Pasture Silver is going to be a 20 bagger. I'm not saying that. I'm saying if you follow the arithmetic progression, that there's a very good probability that a carefully chosen portfolio of high quality silver juniors has the potential for persistent and tenacious speculators to generate a life-changing event. What I said was that I expect that gold will maintain its purchasing power.
Yeah.
If the US dollar lost 75% of its purchasing power, and the dollar maintained its purchasing power, that would suggest a 3-fold to 4-fold increase. It's simple math. Markets are shaped by narrative, but investment decisions should be shaped by arithmetic. So let's look at 3 different pieces of math. The last period of major dollar instability in my lifetime was the decade of the 70s.
Yeah.
The US dollar again lost 75% of its purchasing power, and gold went up 28-fold. If you had told most people, myself included in 1970, that gold was going to go to $800 from 35, I would have accused you of smoking a then illegal substance.
Right.
You know, the second piece of arithmetic is simply that number, the deterioration of the U.S. dollar. We covered in a prior interview the debt owed by the U.S. government and the ability or the inability to service that debt. The inevitability that they inflate away
Yeah, well, they have to.
their unfunded liabilities. So, those are two important pieces of math. The third piece of math is this. While gold is performed in a way that you and I understand, most of the investment community still can't spell gold, despite the fact that it's a four-letter word. It is very, 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 very...
This cycle is unfolding in a way that mirrors past precious metals bull markets, with gold setting the pace and silver preparing to assume leadership as stronger company results begin to confirm the trend. The gradual erosion of the dollar's purchasing power, the weight of long-term debt obligations, and the fact that precious metals remain widely undrowned all contribute to a backdrop that favors sustained strength in the sector. History shows that patience, discipline, and a focus on genuinely high-quality companies can turn these periods into exceptional opportunities. For investors willing to commit to the full arc of the cycle, the combination of structural pressures and well-established market behavior points toward a landscape where thoughtful positioning may be rewarded in meaningful ways. How might the expected shift from gold to silver leadership impact investment strategies in precious metals over the next decade? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.